Well, we think of ourselves as a macro resilient business. And of course, thank you for having me. If you think about what we do every day, it's accounting software and really software to help small businesses run their business and understand where the cash flows are at, understand how to get paid faster, how to send out an invoice quicker. And those are software tools you need, whether times are good or whether times are uncertain. Of course, we also equip accountants and bookkeepers with the same. So we think of ourselves as a macro resilient business and one that wants to help small businesses in any climate.
Completely take your point as well, because obviously, you know, the small businesses that make up a lot of your revenue at the same time. But I've got to ask you, in terms of, because I did flag the OPEX to revenue percentage that you are looking for into FY25. Are you looking at, perhaps because of the macro environment, even with the resilience, at trying to find other means with which to cut costs or spend less? Is that thought in your mind at this moment?
Actually, you know, I think we spent a lot of 24, I would say, right-sizing our cost structure. We made some moves early in 24 to make sure we felt we had a sustainable cost structure as we continue to invest in products for growth. We want to do that in a very disciplined way. So I think the way we look at that 73% guidance is that allows us to invest what's needed to keep progressing tools like AI, like accounting, like payroll software, payment software, for our core customers and their accountants and bookkeepers, while maintaining the discipline of smart capital allocation.
Can I ask you, because, you know, Australia was requisitely strong, even the UK in terms of the growth that you saw, requisitely strong, but there was a little bit of, it's not softness to grow the manner with which you grew in the US, you know, 10% subs growth and the like, and the 17% in terms of revenue growth, but it was a little bit softer than some of the expectations. Is there a reason for that, or is it just, you know, more of an aberrant year and you're expecting it to normalise in terms of that growth rate in the US moving forward?
Well, first and foremost, remember that we had to take out some noisy items like ZeroCon, one-off events, and so our underlying growth rate in the U.S. was about 20%. Now, I think you know that Xero in the U.S., it is still a growing business for us, and that means it requires net product investment to make our product even more competitive in that market. So I think of that as a good result. And of course, we continue to believe the U.S. is one of our important long-term strategic markets. And for us, it's steady as she goes, just continued momentum and progress in the U.S. as we reach, we think, more meaningful scale. So pleased with the result, a lot more work to do.
Now, we've talked about, you know, the absolute strength of your numbers, but I wanted to ask you about, I suppose, one of the competitive threats, because, you know, in so much as you have a dominant position when we're talking about, you know, the services that you provide, particularly for small businesses and the like, you know, we keep hearing about, you know, Microsoft and their AI agents. You know what, all of the hyperscalers and their AI agents and, you know, all of these tools that are going to be revolutionary. Is that a threat to your business, the fact that, you know, everyone could perhaps have their accounting firm, their, you know, HR rep all being an AI agent on their phones, and they might not need a Xero to provide those services?
You know, interestingly, I think all the macro tailwinds around AI are macro tailwinds for us. So, you know, we announced our own AI agent, Jax, but if you just think about our competitive advantage as a company, it really is that we have been the system of record for small businesses and have a wide plethora of small business data on which to build or utilize any models. Quite frankly, we think that all the models and proliferation makes sort of software better for users like us, but what we really care about is having the underlying data that makes those models sing. Secondly, when you think about the agents that are out there from Microsoft and others, you know, they're all inclined to help small businesses work where they want to work. Our belief is the same. If you want to use an AI agent in email or on a spreadsheet or on text, we should allow for that. And so I don't think we think of this as a net threat to us. We think that AI is lifting a lot of boats, and we're very clear on what our business is about, and we'll take advantage of those technologies as and when we can. By the way, you know, our software vendors to us keep giving us more and more AI enablement that we in turn can use to make ourselves productive. So I think we think of it as a net positive, not a competitive threat to our business.